morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks fall as a global tech sell-off deepens amid worries over a further crackdown by the U.S. on chip sales to China. We look ahead to TSMC earnings out this morning. JD Vance accepts the Republican nomination for vice president, doubling down on populist and protectionist rhetoric, as well as lambasting Biden's trade and foreign policies. Plus, we look ahead to the ECB rate decision and President Christine Lagarde's speech for clues on the path ahead for interest rate cuts. It's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi over here in Dubai. Good morning, everybody. So much to get through on this show. We're obviously keeping a close eye on U.S. politics. JD Vance just gave a speech now at the RNC. Some analysis to follow. But first of all, let's just take a look at how markets are faring, because we did see quite the shakeout yesterday for Wall Street, with S&P seeing its worst day since April. Tech index, the NASDAQ, down almost 3% in trading. Magnificent 7 down 3.5%. Bit of a chip rout, and I'll show you a chart in a moment. But as of now, we are seeing a little bit more green with these futures. S&P pointing to a better session today, 0.2% higher. NASDAQ leaning towards the green as well, breaking with some of the price action we had yesterday. Again, some positive momentum coming through this morning. And of course, European futures very much in focus as well. We did have a negative session yesterday, similar to Wall Street. ASML was one of the stocks in focus. But today, of course, the number one event is going to be that ECB event. Remember, they cut at the last meeting. Many people called it a hawkish cut because Christine Lagarde didn't give a lot of clues about the path ahead. That being said, what we are seeing is the euro is trading firmer versus the USD, and that is more of a dollar trade because of the weakness that has come through in the USD in the last 24 hours. Trump's comments to Bloomberg Business Week yesterday propelling some of the weakness in the currency, saying we have a currency problem. He's not happy with the strength of the USD. So another theme that has emerged. Lots of themes to talk about. In chip maker space, let me just show you the price action that we had in some of the key chip makers and chip stocks in the universe here. And you can see that Tokyo Electron, it is open for trading now. 9% lower today. This after a story that came out towards the end of this show yesterday from Bloomberg reporting, suggesting that the Biden administration is considering applying further restrictions onto some companies that continue to sell advanced chip technology into China. And so these are some of the companies in question. NVIDIA closed down almost 7% lower. Broadcom down almost 8%. ASML yesterday, Europe's biggest semiconductor technology manufacturer, down almost 11%. So a big drag on these indices. Now, let's check in also on how markets in Asia are faring. Avril, a lot to digest here, but I've got to think that this chip maker story is also weighing on some of these Asian tech stocks as well.
Absolutely. We're seeing those chip names, the ones you mentioned, Tokyo Electron, but TSMC as well, declining for a second day. The bleed on TSMC today, maybe not as bad, given how there's still some earnings optimism, but we're seeing how the Nikkei is well into negative territory, leading those declines, because how these chip curves might come about is not just targeting China, but it's extending potentially to these allies now, something traders are clearly not prepared for. On the mainland and on the Hang Seng, we're actually seeing a fair bit of green. Let's flip the board, take a look at how FX is faring as well, because yesterday we saw the rally in the yuan and the yen as traders digested pretty pointed remarks from both those currencies from Trump. We're seeing a bit of a breather on the yuan or the yen rally as we speak. Jumana.
Yeah, back to 156 handle. And you got to wonder whether it's yen driving the price action or the weakness in the USD, as we spoke about. Avril, thank you so much for the overview. Now back to U.S. politics. Donald Trump's running mate, JD Vance, has officially accepted the Republican nomination for vice president. At the party convention, Vance pushed a U.S.-first rhetoric, pledging to serve the interests of the American people.
Mr. President, I will never take for granted the trust you have put in me. And what an honor it is to help achieve the extraordinary vision that you have for this country. Now, I pledge to every American, no matter your party, I will give you everything I have to serve you and to make this country a place where every dream you have for yourself, your family, and your country will be possible once again.
Meanwhile, President Joe Biden has been forced to cancel appearances after he tested positive for COVID-19, suffering mild symptoms. Biden had earlier given an interview to the BET network in which he reiterated that he will stay in the race, but said he's willing to relinquish power to Vice President Kamala Harris if he wins a second term and is unable to complete it for health reasons. And CNN reports former House Speaker Nancy Pelosi has privately told the president that polling shows he cannot beat Trump in November. Let's bring in Karl Widerquist, who's a professor at Georgetown University-Qatar. Good morning to you. Well, good evening, I should say. Karl, thanks for joining us. Maybe let's just pick up with what we just heard out of JD Vance. For many around the world, it was a first opportunity to actually hear more and learn more about Trump's selection for his running mate. And my question is whether you think that this actually was a good and useful appointment for Trump, as he seems to be building up momentum in the last couple of days. Will the selection of JD Vance play in well to his base?
Well, yes, I think it does play well to his base. I don't necessarily think that he needs to play well to his base. I think part of what he's looking for in JD Vance is connections with tech industry billionaires who can support his campaign. And in the United States, money speaks as loud as votes does, and louder sometimes. Those kind of things he plays very well. He also wants is somebody who'll do pretty much everything he says. And JD Vance seems to be falling into that column, but he is a bit of a wild card.
Well, the interesting thing is you say that he has those close connections to the VC world, and yet at the same time, if you listen to the speech, he was appealing to working class Americans, talking about his own upbringing, saying that he's not going to be beholden to deep pockets or the pockets of big businesses. And I wonder to what extent JD Vance has actually become the embodiment of Trumpism Part 2, the next generation of Trumpism as it pertains to the Republican Party.
Yeah, well, the strategy, the one thing that keeps Trump and that make Trump and Vance work together is that they don't look at the systemic problems that are causing problems for working class people, which are rules that have continually favored rewarding people who already have a lot of money with more money. Instead, they want to blame some of the most vulnerable people in the world for your problems, as such as immigrants, whether documented or not, or transgendered people. These are some of the most vulnerable people, and they want to single those people out. See, if we make these people worse off, somehow that's supposed to make working class white Americans better off, and it's not going to do it. Changing the rules to favor workers will help working class people.
Right. So you know that all of this is obviously a question of rhetoric. But let me take you to the other side of the aisle, because for weeks now, and ever since that presidential debate, there have been calls from various lawmakers within the Democrat Party calling on the president to step down and, not announce that he's running again for the next round of elections. But Biden is committed to staying in the race. He seems to be defying all of these calls to step down and make space for somebody new. Why do you think he's so intent on running again?
Well, usually you get into politics because you have a big ego. And I think Biden is no exception. He seems like a really nice guy, but he still has that politician ego. He doesn't want to quit. And also, no one's ever quit at this stage of the game. Usually, by the time you've accumulated a majority of the delegates, the nomination is yours. It's too late to be bringing up these kind of discussions. It's coming up because he gave this really bad debate performance, and that brings up new information that people maybe weren't aware of how much he might be aging. So it's coming up at a very awkward time for the party strategically and for him personally. But that politician's ego is making him set in. It's also a question. There's also a strategic question: is changing leaders this late in the process, and an unprecedented late in the process, changing leaders going to be viewed as good as a good move, or is it going to view as making the Democratic Party as a whole look weak?
Yeah, I mean, if you look at some of the betting markets predicted, for example, and we're showing that up right now, Trump's lead has widened massively post the debate, but also after the attempted assassination as well. And then this morning, I was just looking at the predicted odds of who is going to be the candidate at the next election. And for the first time in a while, Kamala Harris has actually overtaken President Biden. How do you think having a Harris on the ticket will affect those overall betting odds into the November election? Does Harris have a chance versus Trump?
Yes, she's younger. She's a better speaker. She has a track record. There's a lot of attractive things about Harris, but I think I think we should look at this very frankly. And what the issue is with Harris is that the Democrats are afraid of nominating Harris because they're afraid of sexism and racism. But they're also afraid of replacing him with anyone else because then they look sexist and racist themselves. So they're in a bit of a quandary. That is a symptom of American politics, that there's so much sexism and racism involved that it affects things at multiple levels, and it makes it really hard for people to look at Harris as a politician rather than as a black and mixed race woman, and that is a real shortcoming for us as Americans to be able to get beyond that.
Yeah, well, to your point, we are getting to crunch time because we're very close to the Democrat convention now. So let's see how this all plays out the next couple of weeks. And also with news that President Biden now has COVID. So, Karl, thank you very much for joining us today on the show. Karl Widerquist, a professor at Georgetown University-Qatar. Thank you for joining. We're just getting some earnings coming through from this part of the world. Let me just bring them to you because we've had strong numbers out of Emirates NBD. Just to give you the highlights, the 2Q net income has come in at 7.1 billion dirhams, blasting through estimates of 4.83 billion dirhams. So that's worth flagging. On the impairment credit, they have posted a 2Q impairment credit of 1.3 billion dirhams due to higher Denzi Bank net interest margins. They're saying they're seeing favorable loan pricing at their Turkey unit as well. But the main takeaway over here is that the net income number has come in much higher than expectations and a lot higher than analysts had been counting in for. So that was Emirates NBD just coming through with numbers. Still ahead, TSMC is amongst the tech names leading the sell-off in Asia as traders look ahead to the Taiwan chipmaker's latest earnings. This is Bloomberg.
I believe the current data are consistent with achieving a soft landing. And I'll be looking for data over the next couple of months to buttress that view. So while I don't believe we've reached our final destination, I do believe we are getting closer to the time when a cut in the policy rate is warranted.
Federal Reserve Governor Christopher Waller on the central bank's rate policy. Let's bring in Jun Bei Liu, portfolio manager at Tribeca Investment Partners. Good afternoon to you, Jun. Maybe let's just pick up with those comments from Waller because it feels as though more and more members of the Fed committee are feeling more comfortable about the prospect of a September rate cut. If they don't cut rates at this point, I think it will be a bit of a surprise to market participants.
Look, absolutely. You are absolutely right. Market is now pricing in almost 100% cuts by September. Now, so far, quite rightly, the data is pointing to that cut, with the inflation being pretty weak. And almost across every spectrum, all the data points are pointing to the right direction. So we do think a September cut is going to take place. Now, market is also pricing another cut further down the track later this year, post the US election. Now, that's a little bit uncertain, but regardless, I think market is expecting quite a lot of cut to come through in the next 12 months.
Yeah, and the irony about all of this is stock markets, for so much of this year, kind of ignored what the market was pricing in terms of rate cuts, because the whole focus was on AI, that magnificent seven, and yet yesterday we really saw an aggressive sell-off. S&P down, almost 2%. Nasdaq, biggest decline since end of 2022, down more than 3%. The chip makers in focus because of that Bloomberg story that we were talking about yesterday. Do you expect this tech sell-off to continue? Does it have legs?
Look, I think it will be weak for the time being. The reason being that, these tech companies have done so well. Now, they are the beneficiary of lower interest rate because their valuation goes higher. But because they have outperformed the rest of the other companies, the market does so well that it is now being used as a funding source. So, what the investors doing, selling those winners and putting into some of the more cyclical leveraged businesses. The businesses are much cheaper, they're more linked to lower interest rates, smaller caps, much more broader base of the market is now beneficiary of that sell-off. So, under the hood, even though the market is down, but under the hood, you are seeing quite a lot of money flowing from those winners into some of those losers or cyclical companies that will potentially do better. But we do think this really barely a pause, because this AI thematic is not going to stop. We are seeing real life applications, and with the lower interest rate, as we talked about before, they are beneficial to those growth company, long duration companies. So we do think there's so much money at the moment sitting on the sideline waiting for this market calm to come through, as well as through the reporting season, and then those sideline money will come in and they will bid up some of those quality businesses that just been sold off.
Yeah, one of the pushbacks that I've heard vis-a-vis this big rotation that's taking place from some of the mega caps into small caps is that we're just at the beginning of earnings season, and come earnings season, once those results start to filter through, particularly on the small cap side, investors may be disappointed, because actually where you're really seeing the earnings growth is still in those big caps, those mega cap stocks right now.
Yeah, you're absolutely right. I do think this earnings season is going to be a little bit of weakness, particularly for smaller cap, for cyclical companies, because as we talked about before, the reason inflation is weaker, the reason we will have interest rate cut is because economy is slowing. So we will see that coming through in the broader corporate earnings, in the small cap, in the more cyclical businesses. So you're absolutely right. For the time being, for the near term, we will see a bit of reversal, a little bit of reality check, if you like. But I do think this rotation and this thematic will gradually play out further as the rate cut coming through, as the broader economy coming through the top point, and as the consumer coming through on the other end.
Jun Bei, I don't know how frequently you're looking at Europe, but we have also another big central bank meeting coming up today, ECB, and I do wonder, with the Fed now and the market squaring in on this September rate cut, whether that also opens the door for other major central banks to continue with their own rate cutting cycle. We know that President Lagarde was somewhat hawkish when they did that initial cut back in June. But I do wonder, with the Fed opening up the gates to the possibility of starting their own rate cutting cycle, whether that means that the ECB also will now have a green light to continue with theirs.
Look, absolutely they will. However, I don't think they will cut today. They will tonight. They will wait to US to cut their rate first in September. So I think the first possible move is September for the ECB. Quite frankly, around the world, a lot of central banks, like you said, are watching what the US is doing. But since the US was the first one to start increasing the interest rate, first one to start curb the inflation, and then now seeing the inflation coming under control. So I do think that September rate cut is very important for pretty much developed economies around the world.
Excellent. Going to leave it there. Jun Bei Liu, Portfolio Manager at Tribeca Investment Partners. Thank you for coming on our show today. A pleasure to chat to you. And later on in the show, we're going to be talking about former South African President Jacob Zuma, who is facing expulsion from the ANC over his election rebellion. We are live in Johannesburg next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Former South African President Jacob Zuma may face expulsion from the African National Congress, the ANC, after campaigning for a rival party. However, Zuma insists he remains an ANC member. A disciplinary committee has begun the process that will ultimately decide his fate. So let's bring in Bloomberg's Kuleko Sewela, who joins us from Johannesburg. And Kuleko, why hold this disciplinary hearing in the first place if Zuma has already once been suspended from the ANC and, as we know, into this most recent round of elections was campaigning for another political party?
So any process has its stages, and the suspension is a temporary measure. It's not the end of the process. The suspension must either be lifted or the next step in this process needs to take place. So they are having this hearing because the process has begun and is still underway.
And just how much damage has former President Zuma done to the ANC? He led the party for so many years. He was president of South Africa for many years. How damning is it that he's going through this disciplinary process now?
So the Umkhonto weSizwe party has done a lot of damage to the ANC. I can debatably say it has single-handedly brought the ANC to its knees. What other rival parties have been unsuccessful to do. The MKP party has garnered 14% of the vote, and I think most of that was taken from the ANC. Had the ANC gotten that 14%, it would have been way above the 50+1% it needed to continue ruling South Africa in terms of governance.
Very clear. Kuleko Sewela, thank you so much for that report on the future of Jacob Zuma. Also in South Africa today, don't miss that South African Reserve Bank decision. We've got a central bank decision also out of South Africa in a couple of hours' time. Most economists are not expecting an interest rate cut, but there is one outlier, that is Goldman Sachs. They actually do think that the SARB might surprise with a rate cut due to the political stability that we've seen since the elections and the fact that the rand has been performing quite well. So something to watch out for also on the central bank radar today. Also coming up on our own show, Apple and Nvidia's main chip supplier TSMC are due to report earnings shortly amid a global tech rout. Analysis next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Asian stocks fall as a global tech sell-off deepens amid worries over a further crackdown by the U.S. on chip sales to China. We look ahead to TSMC earnings out this morning. JD Vance accepts the Republican nomination for vice president, doubling down on populist and protectionist rhetoric, as well as lambasting Biden's trade and foreign policies. Plus, we look ahead to the ECB rate decision and President Christine Lagarde's speech for clues on the path ahead for cuts. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersechi here in Dubai. Let's get you caught up on markets because we did have a big sell-off towards the close yesterday in Wall Street. The S&P down almost 2%, Nasdaq down almost 3%, Magnificent 7 down 3.5%. So a bit of a tech shake-off going on, and the rotation that we've been talking about continues to pick up momentum as investors pull away from some of those big cap, mega cap stocks and reposition into the small caps, which is why the Russell 2000 has been a relative outperformer just in the last week. But of course, the big theme was the sell-off in chips. I'll get to that in a moment. Today, though, U.S. futures are seen opening up in the green, both the S&P and Nasdaq futures pointing to 0.2% higher on the session. European markets not seeing a lot of green, also pointing to a negative session after the negative close yesterday that we had. But the big focus for investors is going to be that ECB meeting. No one's expecting a cut out of the ECB today, but we'll be watching very closely for clues on what the ECB president has to say about the future path of monetary policy. We'll be speaking to Lizzie Burden shortly, who's in Frankfurt for us today. Euro also trading at 109. Namely there, what we're seeing is a rebound in some of these currencies versus the USD because the USD has been on the back foot in the last 24 hours. But this was the theme for chip makers yesterday. A massive sell-off has come through And actually, if you look at the semiconductor ETF, that's SOX, this has been, yesterday was the worst day we've seen since COVID time. So massive drop there, dropped about 7% in total. The likes of ASML down 11% yesterday, this despite their better earnings. Tokyo Electron now trading in the Asian session down 9%. And of course, all of this on back of that Bloomberg story that we reported yesterday that the Biden administration is considering further curbs or restrictions to some Western companies that continue to sell advanced technology into China. So big story there. Let's see how it's all playing out in Asia as well. Avril Hung is standing by.
Yeah, Jumana, chip stock still down today, but I also wanted to talk about what we're seeing in the yen because it's had quite a week. We were talking about 161 on dollar yen not so long ago, and then those 2 rounds of intervention from Japanese authorities as they lean into U.S. data, prompting strengthening in the yen. And more recently, this week is about the so-called Trump trade. There's also been that covering of the short position. So we are looking at dollar yen at around 156. Some of the analysts we've spoken to on Bloomberg TV point out that this, in some ways, takes pressure off the BOJ to hike rates at the end of the month. So it'll be really interesting to watch where the pair goes from here. But of course, as you say, it's also about that chip stock sell-off in the APEC today. Jumana.
Yeah, that's a big story. So we're going to talk more about that. Thank you, Avril. Asian technology stocks are falling for a second day on concerns over tighter U.S. curbs on semiconductor sales to China. That includes Taiwan Semiconductor Manufacturing, TSMC, which is scheduled to report earnings just in the next hour. So for more on this, Bloomberg's Asia Tech opinion columnist Tim Kolpan joins us from Melbourne. Maybe let's just start with the earnings before we talk about the other things that are going on. What are investors going to be watching out for today when TSMC reports?
We already know that revenue is very good for the quarter. TSMC reported that last week. So the focus today will really be on the outlook for this year. There's 2 things that people will be focused on, and we're hoping to get more information from TSMC on. The first is what their own revenue outlook is, and that for the industry. Now, 3 months ago, they actually trimmed their outlook for the industry, but kept their own outlook pretty solid. They believe they're doing very well in the AI sector, and of course we hope that that will continue. The other is, will they spend more this year than they'd previously expected? They're looking at spending about $30 billion on equipment from the likes of ASML and Tokyo Electron. With the AI boom going on right now, there's a belief that they might need even more capacity and might need to spend more money to build equipment, to buy equipment. So there is a belief that maybe they will increase their capex for this year, and we'll find out more about that in a couple of hours.
But how should we be thinking about the geopolitical climate here? Several things are going on. Yesterday, Bloomberg reported that the Biden administration are considering further curbs on companies selling technology into China. So that was the catalyst for a massive sell-off that we've been talking about in chip makers. But then also, former President Trump gave an interview to Bloomberg Business Week where he said, Taiwan took about 100% of our chip business, and Taiwan should pay us for defense. So how will all of these geopolitical considerations weigh on earnings sentiment today?
Yeah, the sector is getting it both from the Biden and the Trump camps, really, on this one. It's quite bipartisan, I guess you could say. The first one, yes, this belief that Biden may increase the curbs or tighten the curbs on makers of equipment that are sold to the likes of TSMC, but specifically to the Chinese companies. TSMC won't be too impacted by it because they're in Taiwan, of course, and soon to be Arizona, Japan, and even Europe. But it's really the Chinese names that would be impacted. So that would hurt ASML and Tokyo Electron. But that's really just a tightening of existing rules. But, Trump, on the other hand, has said very clearly that he thinks that, Taiwan took the US chip industry away from it. That's actually not quite correct. The US is still the largest maker of chips, and if you look at the whole semiconductor supply chain, the US is the biggest name out there. 5 of the top 10 companies by market cap in the world are designers of chips, including Apple and Nvidia, companies like Alphabet and Meta to also design chips and outsource it to places like TSMC. So it's a little bit of a misstatement from Trump. But you see his point that he thinks, well, we should be spending, that Taiwan should be spending more to defend itself, and Taiwan has the chips. So we will see more of that policy coming forward, depending on who gets in the White House, in November. But the key point here is that all sides are copying it because of this geopolitical tension with China and the US.
Yeah, I mean, you can see it in the price action. The stock is up more than 70% for the year, but down 5% in the last 2 days. Bloomberg's Asia Tech opinion columnist, Tim Culpin. Thank you. Chinese President Xi Jinping will map out his long-term vision for the economy later today in a closely scrutinized communique at the close of the Communist Party's third plenum. Expectations range from more stimulus for the housing sector to a greater industry push to speed up urbanization. So for more on this, let's bring in Bloomberg's Asia government and economy correspondent Rebecca Chun-Wilkins, who joins me now. Rebecca, we know that President Xi Jinping has been pushing for high-quality growth, high-tech growth. What should we be watching out for out of this communique that's going to be released in a couple of hours?
Yeah, absolutely. Thanks, Joanna. So the plenum is wrapping up today. We're expecting to see that communique. That's going to be usually a sort of lengthy, vaguely worded document, but we're expecting this to be focused on two key themes. One will be high-quality development, as you mentioned, sort of growth driven by advanced technological industries. The other will be this sort of idea of Chinese-style modernization, and we've seen sort of various social media and state media release articles around this idea. It will look at this focus on self-reliance, advancing manufacturing, moving away and essentially combating some of the antagonism with the US. A couple of sort of more specific things that I'm keeping an eye on. One will be tax reform. At the heart of many of the sort of economic issues that China is facing is the strains that local governments are going through, so provincial as well as city-level governments. So anything that helps essentially transfer wealth from central government to the local government, that could be in sort of the form of tax reform, could be consumption tax reform, which might be fairly unpopular. The other element would be sort of people-focused reform. So, for example, to the hukou registration, that's essentially a household registration system in China that allows access to sort of basic necessities like healthcare and certain residential rights and even parts of the welfare system. Now, China, sort of relatively speaking, actually has a pretty small welfare system, and that, of course, is linked to some of this weak confidence that we've seen. So we may see some of the reform come through on that side too.
Well, we've also got to keep in mind, again, and this is a question that I posed to Tom earlier, the geopolitics and the fact that President Trump, former President Trump, should he come back to the White House, has been, again, talking about the prospect of very high tariffs, up to 60% on Chinese goods. UBS put out a piece recently suggesting that if that does happen, it could cut China growth rate in half. To what extent do you think the external environment is also going to be factored into this communique that's coming out?
Well, to some extent, this sort of growing competition with the US and this idea of self-reliance has actually been present in a lot of Xi Jinping thinking, really right back to 2012, 2013, when he took that top job. So, yes, we are certainly expecting it to be prominent. And in fact, this whole notion of Chinese-style modernization in some ways is about reinforcing and creating a buffer, essentially trying to make sure that China's own supply chains, China's manufacturing can be supported in an environment where countries like the US and its allies are increasingly trying to roll out these economic curbs as well as other kind of sort of strategic restrictions on some of its advanced technology, on chips and so on that we've talked so much about. So I certainly do think that US-China competition is going to be front of mind in some areas. I would also say that the US in some ways is sort of a convenient actor to blame as well for some in Beijing when it comes to sort of trying to make sense of the sort of struggling economy and some of that weakness that we have in the economy too. So in some ways, the US is sort of a convenient antagonistic actor that you have across the table for Beijing too.
Yeah. It reminds me a bit of the Brexit story with the UK economy. It's a convenient culprit over there as well. Bloomberg's Asia government and economy correspondent Rebecca Chun-Wilkins, thank you. All right, coming up, it is ECB decision day, and a rate cut, well, it looks out of the question, but a September move does look more likely. We are live in Frankfurt next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. European Central Bank officials may be about to prime investors for another interest rate cut, even if a move today is effectively ruled out. Traders are likely to watch closely for clues offered by President Christine Lagarde on prospects for the September meeting. Let's bring in Bloomberg's Lizzie Burden, who has dashed over to Frankfurt. Lizzie, I was just looking at what markets were pricing in for ECB. Nobody's expecting them to cut interest rates today, but September is about 22 basis points priced in at this point. It does feel like we are going to get quite a busy September from all of these central banks. If it's not just the ECB, but the Fed we've been talking about as well.
You're absolutely right, Jumana. I can't promise you too much action today, but look, that June cut was well telegraphed, over telegraphed perhaps. So Christine Lagarde today is not going to want to box herself in when it comes to that September cut, even if, as you say, it's what markets and economists are expecting. Why? Well, you mentioned the Federal Reserve. By September, hopefully the ECB will have a clearer idea of what the Fed is going to do. But there are other reasons as well. By September, they'll have more of their own data on CPI, on wages as well. And a lot of the policymakers have expressed that they would prefer to cut when they have their own quarterly forecasts as well. So it looks like we're waiting for September. Christine Lagarde will therefore try to appear non-committal, but without knocking market expectations for two more rate cuts. And to do that, I reckon she's going to dig out the blueprint from Sintra and tell us that they're data dependent. What's interesting is whether they reintroduce the easing bias later in the guidance.
Yeah, and Lizzie, to your point there, how is the GC looking at the moment? You typically have this divide between the hawks and the doves. What are the hawks saying? What are the doves saying?
Well, it'd be interesting because actually they're down a member at this vote. The Spanish central bank chief de Cos is yet to be replaced. But at the hawkish end of the spectrum, there's caution, of course, because they point to the annual wage growth, about 5%, services inflation, about 4%. And they say, look, unemployment's near a record low, so why would you be in a rush to cut rates? But, Jumana, at the dovish end of the spectrum, they would point to Eurozone growth already losing steam when it comes to the recovery. They would point to the fact that profit margins are actually starting to shrink because you're seeing companies absorbing the labour costs rather than passing them on to consumers. What's interesting, though, is you've got the Belgian central bank chief, Pierre Wunsch, actually saying that he agrees with the market pricing for two more cuts this year, saying it looks reasonable, though not yet the universally held view.
Lizzie, thank you so much. We'll be watching out for everything that comes out of that press conference. Also, coming up on our show, a ceasefire remains elusive between Israel and Hamas, but our next guest says economies have been able to adjust amid the conflict. That interview next. This is Bloomberg. The IMF has cut its estimates for growth in Middle East and Central Asian economies to 2.4% this year from its earlier 2.8% estimate. I spoke to the IMF's director of MENA and Central Asia about the instability within the Middle East amid rising geopolitical tensions.
Well, it does have an impact, mainly on the epicenter of the crisis, which is the Palestinian economy, West Bank, and in particular Gaza, with a huge set of economic and social destructions. It has an impact also on neighboring countries, though at different levels. Lebanon is more affected than other countries that are surrounding this conflict. Countries have been able to adjust, Jordan, Egypt, and have maintained good level of economic activity. Tourism sector has recovered partially in the region, and the numbers for this year are comparable or even better in certain cases to last year. Where we are still seeing an impact is on trade. especially because of the insecurity on the trade routes in the Red Sea. It has affected the trade that is usually goes through the Red Sea and Suez Canal, and affected slightly the economic activity in certain number of countries who benefit from this flow of trade. The oil and gas market or the financial market recovered after a short period of volatility, but in both cases, now it's much more dependent on global developments, on the supply and demand for oil, and also for the markets. It's much more now linked to the developments into the international financial markets.
Yeah. Let me just ask you, because you bring up supply disruptions. We at Bloomberg monitor the number of attacks on vessels that have taken place in the Red Sea. June, we saw actually an uptick in some of those attacks taking place. To what extent are you at the IMF keeping a close eye on those shipping disruptions, and how likely are they to further influence your estimates for growth for the region in coming quarters?
Well, of course, we monitor closely those developments, and we are seeing that the volume of trade has declined drastically through the Red Sea, especially for container shipping, where 2/3 of the trade has dropped compared to the same period last year. And we saw also a slight increase in the cost of transport, though it's still less than what we had in terms of cost of transportation in 2021 and 2022. This trade uncertainty is affecting neighboring countries, but what one also could say that we saw a rapid response and high level of flexibility in adjusting to that. And therefore, it did not lead to a disruption in trade. It did not lead also to a disruption in oil and gas shipment. And this is something that helped to stabilize the market and reduce the level of volatility that we saw in the first few weeks of the war in Gaza.
Jihad, Azour also spoke about the challenges facing the Saudi economy.
The Saudi economy in 2024 will grow by 1.7% compared to a negative growth last year in 2023 by minus 0.9%. And in 2025, we expect growth to be at 4.7%. The major part of this revision of the expectations is because of the extension of the OPEC Plus agreement that has been extended for one more year to September 2025, and the gradual reduction in the voluntary cut that the Saudis have been doing. Therefore, we had to revise technically the growth for the oil sector. And for the non-oil sector, I would say it's still the level of growth higher than the global growth, 3.7% is our expectation for the non-oil sector this year. And in the medium term, we expect the non-oil sector to grow at above 4%. We had some moderation in the non-oil sector, but I would say still the trend of relatively strong growth that we saw since 2021 after the recovery since COVID is still there.
My Bloomberg News colleagues have written a report recently about the fact that Saudi Arabia has had to start cutting spending on some of those mega projects, or placing some of them on hold, rediverting funds, reallocating towards other smaller projects or more projects that they think are going to have a higher return on investment. To what extent do you think these spending cuts are going to weigh on overall activity? And will they, if they continue with these spending cuts, will that also cause you at the IMF to reevaluate your own estimates of how fast the Saudi Arabian economy can grow?
Well, those recalibrations are part of the, I would say, the classical revision of any medium-term strategy. We are almost at a midpoint in the Vision 2030, and it's something that is welcomed by us, that the authorities have looked at their investment program and then recalibrated some of those. What is driving the non-oil growth in the Saudi economy is a mix of increasing demand, the impact of structural reforms that have, for example, improved economic activity, but also improve the employment indicators. We saw doubling of the women participation in the economy, a drop in the unemployment. Therefore, structural reforms, investment, increasing demand by opening certain number of new sectors are driving the growth in the economy. And then when we look at the non-oil economic activity, is still growing at healthy rates. On average, we expect it for the next medium term to be exceeding 4%. Inflation is still low, and it has been revised slightly downward. It's 1.7% this year, which is very good control over prices, and our expectation that inflation will remain around 1.9 to 2% in the medium term. Therefore, the management of the economy, the ability to keep prices under control, the translation of economic growth into job creation are steps in the right direction in accelerating the diversification of the economy and growing the size of the non-oil sector.
That was Jihad Azour, the IMF's director of the MENA and Central Asia, speaking to me last night. And that is it for our show today, Horizon Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe.